Awesome. Thank you so much. And thank you, everyone. Good afternoon. Thanks for joining after lunch. Today, we're going to talk about a highly anticipated topic about the rise of crypto and wealth management and the increasing adoption of crypto as a new asset class for family offices and institutions. My name is Christopher Keshian. I'm the CIO and founder of Triton Liquid Fund. We are the first Abu Dhabi-based liquid investment fund that invests in crypto. We run a strategy that combines qualitative and quantitative research to construct and rebalance a portfolio. Today we're diving into a topic that represents one of the most exciting shifts in the investment landscape. The emergence of crypto as an asset class is reshaping wealth management, but provides a lot of both opportunities and challenges, including diversifying portfolios with uncorrelated returns and navigating volatility and uncertainty. In today's session, we will explore these topics with this star-studded panel, who I will let introduce themselves now, starting here with Maurice.
Hello, everybody. Maurice Mureau. I'm the CEO and co-founder of Hodl, a manager in digital asset fund manager. As that is, we run different strategies across different countries in Europe, and yeah, I'm really excited to talk about the pickup in investment we see in the space already.
Good afternoon, everyone. My name is Adrian Larsen. I wear two hats. A very cool hat being a portfolio manager in the blockchain fund, but I'm also a partner in a multi-family office in Denmark where we represent 10 of the wealthiest families in Denmark. We're extremely thematic driven, and that's why we've taken the stance that we need to be allocated towards the blockchain ecosystem for the next 10 and 15 years.
Yep. Hello, everyone. My name is Yakov Lebedev. I'm with 3 Commas, and I'm on tech side of this panel. So we at 3 Commas, we're building trade management, trade automation, order management, portfolio management tools for on-exchange execution. We're for quite a long time in the space, since 2017. We have tens of thousands of clients active every month, trading billions of dollars of trading volumes, again, every month. And what started as a tool for traders, for retail traders, I think now is widely used by institutional traders as well. And I think around half of our business right now comes from the institutional traders of different types. And myself, I have a background mostly in trade technology again. I worked for several exchanges, including crypto exchanges, major ones, and traditional finance exchanges. So, yeah, thank you very much.
I'm Matteo Perruccio. I run strategy, corporate strategy for 3IQ. You may have heard from our CEO on the previous panel, Pascal. So I'll just briefly explain. We were an innovator and first in ETFs in crypto in Canada and in the world. Have since moved on with a strong conviction that the future of asset management and digital assets is squarely in active management also, and being able to provide investment solutions, particularly for family offices and institutions. I also have a unique perspective because I was chairman of a multifamily office for many years also, and clearly I'm the oldest panelist in the room with a tie on.
Great, thank you all. So to kick things off, I'd like to start by discussing the current landscape and where we will focus on crypto's adoption in family offices. And maybe starting with you, Maurice, how have family offices' perceptions of crypto evolved over the last 5 years? And what has been the primary driver of this shift?
Well, the primary driver is obviously FOMO.
Yeah.
But we could see a shift in the landscape. So when we started with the first fund in 2020, it was mainly high net worth individuals who wanted to have access to the space but didn't have any clue how to do this. We always explained that it was quite user unfriendly. If you want to buy some crypto, most of the time Bitcoin wasn't too much of a problem. As soon as you derive to other digital assets. It became a little bit complicated, especially when you tell your average traditional investor that you need to go to exotic exchanges like Pancake Swap. But they look at you and say, are you now taking a joke? So no, that's really what it's called. So we just gave them an opportunity to have, outside of the normal portfolio, access to digital assets, a basket. But then we saw obviously the space evolve. We saw everything happen in 2022, which was a bit of a shakeout and a wake-up call for a lot of companies to see, okay, maybe we should do a little bit more than just holding a basket for them. So that led to the involvement of more products and more needs. And actually, if we look at when the first family offices came in, it was a bit late 2023, early 2024, when we really saw them arrive. And why did the family offices were actually the next step after the high net worth individuals? Because their decision-making process is relatively quick if you compare it to other institutional investors. One thing that was very nice to see is that all the family offices we talked to did bring their next generation into the table. So we kind of had a feeling was pushed by the younger generation within the family office that they actually needed to have a look and a stake in it.
Absolutely, yeah, we see that as well. And so moving to you, Adrian, I know you represent a number of these family offices. How does your organization support these family offices in understanding and accessing crypto investments?
I think from a family office perspective, there's two types of family offices. There are the ones where the wealthy individual is still running the money himself or herself. Those organizations are fewer than the other type of family offices where they hire a bald guy to try and run some of their alternative assets. But the first group, where the principal still runs their own wealth, are typically a little bit more risk-seeking because they still want to have a finger in the pulse. For organizations such as our family office, which is a multi-family office where we typically take the decisions on their behalf, we are typically a little bit more risk-averse because the toughest thing for us is to keep their wealth intact. So why should we go into such a new asset class, such as blockchain and digital assets? And I just want to admit that it's very, very, very tough for us to get the families to buy into a new asset class like digital assets because they have no fucking idea what it is. So we really have to put our own jobs at risk and get them to understand that this is a new asset class. It has $3 trillion already, and if we're not taking this serious, we're really not doing our job well enough. So the way we're supporting these families is by being educated ourselves, going to conferences like this, but also looking on all the different products that 3IQ or some of the other panelists have, because this is our job. We need to be allocators on behalf of these families. And I think we have been complacent within the financial industry. We have disregarded this industry for a long time, and I'm feeling very optimistic in the current landscape because it is getting more positive media around the world, especially after the Trump inauguration.
And I just wanted to add a little perspective because I think family offices are very different by geography, and clearly Northern Europe, Anglo-Saxon family office culture is slightly different from Mediterranean, and I think that there's two dynamics that are at work in the family office space. One is the generational one that you touched on, which is a lot of pressure from the next generation to push the patriarch or matriarch to make a decision and say you can't not be involved in this. And I think the second one is that's not often spoken about is institutionalization, what I call the individualization of family offices. Their processes have gotten much more professional due to all the tools out there. They are able to evaluate, and they go through a much more rigorous process than it used to be. Who's the friend of my accountant? He's telling me I should invest in this. Bring it to this young guy to look at it, and then we'll invest. It's now much more rigorous, and so I think we have challenges that you're talking about where we've fallen down. Is we haven't been speaking the language of the family offices, coming in and saying, "Hey, we got this cool shiny thing. You should buy it. Come on, it's going up by 1,000%." It's the worst thing you can say to a family office. especially because of the protection of capital and all the other cultural orientation that they have. So just wanted to add that, sort of perspective.
Thank you. Perfect. Yeah, so it's interesting to hear how this landscape is rapidly evolving and appetite is increasing. And so to pick up on this point, I want to ask you all how you see family offices' ability to smartly and efficiently and securely diversify into this asset class. So maybe coming to you, Yakov, how can platforms like 3 Commas support family offices in managing and optimizing their crypto portfolios?
Yeah, that's a good question. So I think everybody already touched on this a bit. So stepping into crypto involves quite a steep learning curve, I would say, a high entry barrier, especially for those who are not considering themselves as a sort of, crypto degen type of guy.
Degen.
Degen, okay. Yeah. So it is a bit of a challenge for everybody, especially moving from TradFi space to crypto space. And I think the very important thing that that needs to be done, and what we are doing here, is simplifying this entry, because after all, crypto is like it is very unique in a way that it allows it gives you an opportunity of direct exposure to a new asset class with very low operational costs. But the entry barrier is still high. So to simplify this journey, we are building a solution for asset managers, and we've just launched it, a specific solution that helps to manage all your portfolios, all your accounts across different trading venues. And this is another problem, another special thing about crypto market, the fragmentation of this market. So we're helping to deal with this and to manage all your portfolios, all your accounts within one space, whether you're managing your own accounts, your own portfolios, or you're working with client assets on SMA basis. So you can use 3 Commas to connect all the exchanges in one place.
Absolutely, yeah. Simplifying that process is
Yeah.
a huge value add. So coming to you, Adrian, next. How do family offices evaluate crypto's role within their broader investment strategy, and what frameworks or metrics do you recommend they utilize?
This is really different from family office to family office. It has to fit within that specific family. So we represent 10 very individual families. One guy wants to have 120% allocated to public equities. The next guy wants to have 70% in cash. So it really comes down to what risk appetite do they have. And that's where we always start, is with their individual risk appetite. I kind of want to take this question in a different route. I think a lot of panels today have been talking about how Bitcoin might be the first step in from family offices into this space. I think this is a completely flawed argument. Let's just entertain the idea that Bitcoin is a single asset within this, or single stock within this entire ecosystem. If that's the case, it's called digital asset forum, not digital Bitcoin forum. So if I was an equity picker or an equity trader for a family office, I wouldn't have NVIDIA as the only exposure in a 60-40 portfolio. It's crazy to think that. So if we really want to see this as an entire digital asset ecosystem, a new asset class, we have to recognize that there's multiple different ways of expressing this new asset class. So I think you ought to pick a number of different ways of expressing your view within this asset class. You cannot just pick one, the best performing one, and say that you're diversified. You're adding too much risk, and I think that's leaving some of these family offices and institutions on the background, because they think that it's just Bitcoin. And if we're making the argument that it's an entire new asset class, it's a tough sell from a risk perspective, in my opinion.
We bumped into each other at cocktails last night, and he said he's got a lot of opinions. I said, well, we're gonna fight it out on stage, but unfortunately, I agree with you. So I'm getting ready. I have my boxing gloves on, but everything you say is sensible, so that's a problem. But I totally agree with what you're saying, and I think we think about I used the analogy of emerging markets with some family offices, and I said, we remember the old days when, emerging markets were really a niche investment in a major portfolio, in an equity portfolio. People didn't have the skill set to evaluate, how do you understand Bolivia versus Colombia versus Russia versus, and then China came onto the map, and it was, everybody thought they had to have China in their portfolio, but when it first came, everybody was scared of having, and I remember people telling me it's the Wild West, I would never hold Chinese stocks, and now you'd look kind of silly not having an allocation to China in your emerging markets portfolio, and emerging markets have become mainstream. I think it's exactly the same situation we're going to see with crypto, and there are markets that will fall out for a whole host of reasons. They will be darlings for a while, and they'll fall out. We all remember, certain markets like Venezuela, and others that people, was the future of emerging markets, and now are no longer. So I just think the world, what is it they say, history doesn't repeat itself, but it often rhymes. I think, this isn't that different. It is revolutionary, the underlying technology, but the phenomenon of a new asset class is going to follow a certain trajectory that they generally follow. And so I think we need to help family offices understand that and understand how they give them vehicles that they're familiar with, that they can access this incredible opportunity with.
Thank you. Yeah, so Adrian, you mentioned risk before Matteo stepped in, so I want to come back to that. And so with optimizing asset allocation comes managing risk. And as we've seen from this weekend, this market can be wildly volatile, and especially on low liquidity weekends with thin order books. So coming to you, Maurice, volatility is a significant concern for family offices. How do you position crypto investments to address these risks?
Yeah, so volatility is also an opportunity, of course. So there's two types of family offices. There's also two types of investors. One say, okay, I just want to have the directional exposure, but just as a small part of my broader portfolio, because on the long term it correlates differently. And I think there's a risk-reward ratio that's actually better than my other investments, which could be shares, bonds, etc. But on the other hand, there's also people who see the volatility but do want absolutely no directional exposure. And there you have hedging strategies that are being optimized all the time. So we have a market and delta neutral strategy which is fully hedged, but still makes a decent, somewhere between 10 and 20% annually without any directional risks. So as long as the volatility stays high, the return will be higher. But even if you backtest it to bear markets in 2022, it's still very decent because volatility in the downside also is good for your derivatives.
Absolutely. Yeah. And
Can I jump in?
Yeah,
here?
go ahead.
Sorry, you might want to put your boxing gloves on now, but I see a lot of exchanges on here at this conference, and of course we love volatility. It increases trading. It doesn't matter. If we're trying to establish a new asset class, we shouldn't have 1 or 2 weeks of high volatility and call it a day. This is an asset class for the next 10, 15 years. These weekly swings, it shouldn't matter from an investment perspective for family office. We're taking views over the next 5 to 10 to 15 years. So yes, if we call this the panel for trading, it will obviously matter. But from a risk perspective, we need to understand if the technology will work 10 years from now. And I think we're trying to build a industry where my mom and my future kids will use this technology without even knowing it. And if we're seeing adoption across the globe going up every single week, the volatility of the price doesn't matter, in my opinion.
I think, unfortunately, I agree with you again. But I also think that there's a conflation when we talk about volatility, because there's been a lot of misinformation in the press, and we've also gone through a whole cycle over the last 10 years of cleaning this industry up, and a lot of the bad players coming out, and so there's this conflation between market volatility and sort of asset risk and reputational risk. And the people who are unfamiliar with this, a lot of family offices conflate it and put it all together. And when you talk about volatility, what they really mean is FTX, and so I think we have to start talking about it as a financial instrument, like you said, an asset class, and separate the industry and the segment, and stop using terms like cryptocurrency to mean everything, and then banned it as cryptocurrencies are bad. I grew up in the hedge fund world, and it used to drive me crazy when I'd meet an investor and they say, I don't like hedge funds. I don't know what that means. I mean, it's like, I don't like meat. I mean, do you like pork, ham, So it's just it's frustrating sometimes because we're fighting a good fight, and we also do ourselves a disservice by using terminology too loosely and not using terminology that people understand.
No, and actually, if you look back a year, you would say, yeah, we have volatility because Bitcoin went down from 102 to 95,000 in a night a year ago. Everybody would sign blindly for it to have a price action in that range. So it's all in perspective, and you need to see it in the long term.
Yeah, and all markets are volatile indeed, because remember, like a week ago, Nvidia going minus 17% in a matter of moment, and like everybody from crypto space started posting on Twitter, what is that shitcoin going down 17% in a moment? So yeah, that happens in all markets. But from my perspective, volatility is not a problem. It can be an opportunity, but what the problem is here in crypto is that the market, unlike the traditional markets, is traded 24/7, 365 days a year, and the volatility can happen like anytime because it's traded in Asia, in the US, in Europe. So the news can go out any time zone. And here comes the thing. Yeah, you need to tackle this problem, and this is huge operational expense for anybody coming from traditional finance.
Yeah. So maybe we'll let you speak a little bit about how you all at 3 Commas provide risk mitigation tools.
Exactly. This is the point. So this is when you need to use basic automation tools, trade automation tools, because otherwise your operational expenses just on running these strategies, if you do it manually, it will go like nuts. You cannot live with this. So I think this is very important to understand that trading crypto, being in this space, it is trading automated strategies. You cannot live without this. And the market going into autonomous AI agents trading on their own is just the next step, but you need to do the first step first before moving to AI agents.
Could I add a comment?
Go ahead.
I do disagree with this, finally.
Okay.
I agree in the concept, but I think we're skipping over a problem. I'll use the analogy again of emerging markets. How many family offices have in-house knowledge to trade emerging markets when it was first a nascent asset class? Not many, right? And to think that we're any different in digital assets, for some reason people think they can hire 2 people and start trading in digital assets because it's so easy. They have all this technology at their disposal. We can trade. I personally believe, and maybe it's because I'm old-fashioned, but I think we should let people who are experienced and have the infrastructure and the risk management tools, and some degree of track record and are regulated do this for us. If I'm a family office, I'm concerned about reputational risk. I'm concerned about investment risk. I should entrust a respected player, a player with experience. And that's not to say that there aren't young or small or startups that are not qualified, but I do think there's an energy in crypto which is exciting, but it's also part of our problem. So we think anybody can do anything if you have technology, and it's not necessarily true.
Absolutely. You're basically giving my fun pitch for me. This is it's a 24/7 asset class, trades globally. A lot of the market activity is driven by Asia when the West is asleep, and the pace at which new projects are launched is impossible to keep up, even if you're doing this 24/7 like my team is. So I echo that sentiment. So as we consider these risks, what frameworks and mechanisms should be put in place to manage the pace of regulatory change and maximize opportunities for crypto? So coming to you, Adrian, there's a lot of positive regulatory development in the US. How might regulatory clarity or innovation impact the adoption of crypto among family offices?
I'll say it in one word: it's essential.
Beautiful. Yakov, coming to you next, what are the main operational or technical challenges that family offices face when entering the crypto market?
Yeah, we already touched on operational challenges, I think. So from the technical perspective, I think the fragmentation of the market is very important, and you really need to take it into account. So let's say, even if you want to build your own, portfolio management solutions, you want to keep everything in house, you still have to execute on different venues because the market is fragmented indeed, and the infrastructure cost for this will be enormous. So we know this by heart because we've built connections to all the major exchanges, 20 plus markets, and I was amazed to find out that we have a whole team responsible just for the integrations. And the reason for that being is that in TradFi space, the tech is pretty much standardized. So you have fixed, fast protocol that you can use if you're on tech side, and you can use industry standard approaches to that. That's not the case for crypto at all. So crypto, everybody has his own opinion on how to build protocols, APIs, standards, and everybody, I think we have quite a lot of exchanges here, maybe not in this room, but on this forum. Well, every exchange has his own standard on building API and changing this API overnight with very short notice. So we have to live with this. We have to invest heavily in this. And I was shocked to find out that we spend hundreds of thousands euros on infrastructure only every month just to maintain all this stuff. And I think this is a big challenge for those who want to be into space in the institutional side. So the standardization will go on in the space, but until that, you have to use, let's say, technology aggregators like 3 commas to access the markets. Otherwise, you will just spend all your margins on infrastructure.
Absolutely, yeah, I can echo that. Running a fund, we spend a lot of time on operational security, a lot of time on our back end, because unlike TradFi, if someone takes your crypto, it's basically gone. there's no recourse there. So coming to you, Maurice, so building on that, what strategies or resources would you recommend for educating and onboarding family offices into the crypto space?
I want to get one step back to the regulation part, if
Go
it's
ahead.
possible. So yes, obviously it's necessary. I fully agree with that. But we could also see that if it's a family office or another institutional investor, they need to look at their kind of landscape and rules and regulations as well, because we often hear, we cannot do business with funds that do self-custody. And then I'm going back and say, okay, what do you mean? What is custody on a digital asset? Because I cannot get them out of the blockchain. So how are you going to see that? And then it all comes down to the private keys and how they are held. But then still, it's a whole governance model attached to that to secure that even if the private keys are somewhere stored safe with a third party, etc., as a manager, you still control the assets and you can move them. So it's very difficult to try to explain that they have certain safe backs or fallbacks in place that just don't work for the digital asset industry. Which is something they have to overcome apart from the regulation on our side and the regulator's side. That we can say we need to get the not so honest parties out of this world and make sure everybody is done via a more regulated way. It works both ways. So, and to get back to your question, what was it again? Yeah.
So what strategies or resources would you recommend for family offices? Educating and onboarding.
Like I already mentioned before, I think one of the main drivers with the family offices is the younger generations. They've been in contact with digital assets without knowing it, with their tokens in their games, with those kind of things, that they kind of grew up with this. That actually makes it easier to explain what it is, because it's digital. You cannot touch it. It's not a building you can touch. It's not a service you can hire. It's not a product you can eat or drink. It's very difficult for them to kind of see the need of the digital asset. And to explain that is a lot of education you need to do. And one example I use a lot the past days is if you have an AI agent and you think it's going to trade, are you going to call your bank and ask them if you can connect your AI agent to your bank account? What do you think would happen? So a digital wallet for your AI agent to be able to actually trade whatever it's doing for you, if it's booking a restaurant or if it's buying a product, would be very beneficiary. And if you can kind of get them to see the connection that it actually has a use case, then they're willing to invest a bit sooner. But still, it's education, education, education.
Beautiful. And just to wrap up this topic, Matteo, so you deal with a lot of institutions. What do asset managers need to make entering the asset class friction-free, efficient, while still maintaining responsibility and ensuring the right guardrails are in place?
Well, I think, excuse me. I think the first thing is, again, we have to be careful not to reinvent the wheel. I mean, this isn't brain surgery, as they say, right? We have to do things in a regulated, compliant, risk-managed way. That applies. There isn't a difference in terms of the concept of risk management in digital versus TradFi or traditional finance. You're still looking at a series of activities and making sure that they're acceptable and that they're monitored and so on. So I think that the first step is putting them in vehicles that are regulated, that people understand, that they can access in a familiar way. Secondly is to have oversight. And you made a point about the sort of, it's not necessarily internal, I think you called it internal regulation, so the family office's own considerations, they're still in the TradFi world, trying to apply that to crypto. Well, you know, we at 3iQ, we built one of the first managed account platforms for crypto hedge funds. And in that process, you know, we try to explain to investors that when you invest in a Cayman hedge fund, you don't ask much about, Northern Trust, right? They've always been doing that. You just take for granted it's solid. You don't ask who the auditor is. You don't normally, right? It's just a sort of a checkbox. In crypto, it's much more complicated. You've got cold wallets, hot wallets. You've got a bunch of different exchanges involved. So the role of due diligence, the role of regulatory cover, the role of proper administration of compliance is infinitely more important in the digital asset space. So certainly at 3iQ, it's one of the reasons I was attracted to the firm was that it had this ethos of saying we need to apply the same rigorous standards that are applied in traditional finance while continuing to innovate. Because that's why people are excited in this industry. They don't want to have traditional finance products, but they want them to look and feel and be robust like what they're used to investing in. So I think that's the real challenge. And the problem is that if you get a crypto native firm, often the psychology, philosophy of the people involved is not coinciding with the needs of the traditional finance, the people who have been investing in the traditional finance world.
Thank you. So we have about 5 minutes left, and so I'm going to go off-piste for the remainder of this session. We have, I'm sure, a lot of family offices out there, institutions looking to allocate to crypto. And so I want to ask you all, we'll just go one by one, how you would recommend they get exposure, whether that's dipping their toe in or going fully in, and what mechanisms they have to do so. I'm happy to kick things off, and then I'll go to Maurice, and we'll just run down the line. So the way I think about this space is you should buy and hold Bitcoin yourself, which now you can do through these ETF products that have low fees, and you should not pay a manager to do that. You should invest in liquid funds like directional strategies or long-short, delta-neutral strategies, whether you want directional exposure or try to capture the volatility of the space. And then, of course, we have VC funds to get early stage. So coming to you, Maurice, if you're a family office out there wanting to get involved and you don't have crypto exposure yet, what would you recommend they do?
Well, at least have some crypto exposure of digital assets. Like Christian said, all family offices are different, so it all depends on the risk appetite, the size, where are they at. What we tend to see is that structures like venture capital in digital assets or market and delta neutral in digital assets is more familiar for them than a directional strategy. But I would definitely, apart from Bitcoin, which you said is easy to buy nowadays yourself or in a structured product like an ETF or even MicroStrategy if you want it in a listed share. It is a very deep research process to get to the right other digital assets than the Bitcoin, because I always take the parallel with the .com days. There were a lot of promising projects in the beginning, like Alta Vista and Yahoo, which will be taken over by Google and is now taken over by ChatGPT and other AI models. So you need to be constantly researching in an evolving space. So if what Matteo said, you think you can all do it by yourself, you're two analysts, well, good luck. Please hire somebody, if it's not me, do one of the others that help you with this journey. And at least try something. Even if you don't like it, just give it a try with a very small proportion of your portfolio. The worst that you can happen is you lose 0.5%. Well, you probably can even make that up with your government bonds.
Adrian?
I think this is a very good question. But within this industry, I think we have the empirical evidence to say that we need digital assets as part of some allocation strategy now. So fine. So how do you actually buy it, or how do you actually get exposure to blockchain or the digital asset ecosystem? I think the first point to make is there is so much information asymmetry in this industry that I think we are all so emotionally driven, especially within the space, and we think we can invest in one fund and that fund is just the best fund out of all. And I think that's extremely flawed. We are so emotional driven, and family offices are emotionally driven. So if we want to have a proper sober way of expressing ourselves, we probably have to look to TradFi, unfortunately, to look at how they allocate to such a new thing. And it is by diversifying across different managers or across different assets within the space. And how do we do that? It can be through a bank, it can be through a fund of fund, it can be hiring a small team, but we have to recognize that there's so much information asymmetry, and also still, even though we have had a few cycles, there are so many cowboys out there, so we better watch out as well.
Yakov?
Well, I will argue here because I'm a huge proponent of obviously direct allocation, direct exposure to crypto. And I think that when we're trying to apply TradFi world rules to crypto, we're losing the key advantages of crypto. So as I mentioned before, crypto is unique in a way it lowers the operational cost of direct ownership of that class of asset. That is incomparable to traditional types of assets. So you need to get this advantage. You need to use this advantage. So I'm a huge proponent of direct allocation, and I think at least part of portfolio should be in that. And this is actually supported. So there was a family office survey report published by Citi back in September, so a few months ago, but yet before the elections, US elections. And as I remember, 17% of family offices reported that they do have crypto in their portfolios already. And out of these, 24% were in direct ownership. And only 18%, the second popular option, 18% was ETFs. So direct allocation is the most popular option. And I think there is a reason behind it.
So finally, I can disagree with someone.
Okay, me too.
Vehemently. I would never recommend for an uninitiated a family that's uninitiated in digital assets to try to go direct. And I don't think if you find an appropriate partner with the fee structure that's fair, I think the upside and the asymmetric return profile is more than worth it. So and I have fought hard not to pitch 3IQ because I don't like that when I'm sitting in the audience, but unfortunately it fits perfectly with what we're talking about. Our philosophy was all around giving institutions, family offices access to this asset class in a robust institutional risk managed way, in a fair fee structure or they can have someone else who's got the resources and the time to do due diligence. So, thank you for letting me disagree with you.
Awesome. We're up on time, so thank you so much, panelists, and everyone feel free to come chat with them after. Thank you.